We are in a good spot. So yeah, welcome everybody again to the latest installment of the LiveFlow webinar series. We have, like I've been saying, an incredible guest this week. Nikole Mackenzie of Momentum Accounting is joining us for her session, LiveFlow, the session AI, presenting to you what will ultimately become your new way to elevate your advisory offering. So let's kick it off. So first off, we have a couple guests here. We have Josh from LiveFlow. Josh is our senior product and modeling specialist. He has 3 years of experience over at JP before LiveFlow. He's trading securities over there. So yeah, has some really, really incredible experience within the financial industry. And if you're a LiveFlow customer, you know that he really brings that to the conversations and just how we can help you succeed and how you're reporting and everything there. So really excited to have him on this call and just answer any of these questions and ultimately be this resource for you now and into the future. And without further ado, our very special guest, Nikole. Nikole's been in the industry for about 14 years now. 10 of those have been specializing in CAS. She's recognized as a thought leader in the accounting community. I'm sure, as you know, she's on advisory boards for leading companies like Intuit, Xero, Gusto, FreshBooks, a lot of great stuff. Obviously, an incredible thought leader, also a co-host of a great podcast, Cash Flow Show. Definitely recommend that you subscribe if you haven't already. Really interesting stuff. And yeah, really excited to have her on the call today to dive into this presentation and really just get a lot of good insight to the people. But yeah, Josh, I will hand it over to you to do a few other intros here. But thanks, team.
Perfect. Thanks, Michael. Yeah, as Michael noted, I actually joined LiveFlow about a year ago, and I just passed that year mark. And one of my primary responsibilities is to interact with our existing customers. And I'm very much excited for today's webinar because a lot of times I hop on customer calls and they ask me, the question, hey, do you have any templates on forecasting? Or do you have any information on how I can up-level my advisory services? And quite frankly, it's blind leading the blind because, I have some idea of what may be good, but it's through secondhand, through understanding customers who are very successful at their advisory work that I myself can kind of help some of our customers trying to break in. But I think there's no better way to understand advisory than hear it from somebody who's done it very, very successfully, and that's Nikole. So for today's session, it's actually going to be much about her journey at Momentum Accounting and how she was able to up-level her services and tackle advisory and then scale it as well. So without further ado, Nikole, feel free to take it away.
Awesome. Thank you. Thanks for having me. Okay, let me get set up here. All right, so before I jump into the meat of the presentation, I just wanted to share a quick story that will, I think, illustrate why I care about this so much. So when I first started Momentum, I was about 18 months into it, and I was referred a new client. And the situation I came onto was, it was a family-owned business, security staffing company that started in 1970s by dad. Dad founded the company. In 2012, dad passes away, so one of his daughter takes over. Fast forward to 2019, the mom, who's 82, and the other daughter discover that the daughter who's running the company had been embezzling from the business. And at this point, the mom still owns the business 80%. So basically, she's stealing from her own mother. So mom and other daughter decide, we're going to take back over operating this $10 million business. However, neither of them have ever run a business before, and the mom has been a homemaker the most of her life. So as you can imagine, chaos ensues. So I come on, my team come on, we start working with them. And so I come from public accounting background. I have an audit and tax background. I did a little bit of CAS at the firm I was at. But this is, one of my first few clients that I've had since I've started my business. And so I just did what I knew how to do. So we started putting financials together. They were barely making payroll each period, or sorry, they had no access to financials for the last 2 years when we came on. They were barely making payroll. There were several times where we thought, oh, this is going to be it. This is when they go bankrupt. But somehow we used to call them a cat with 9 lives. Somehow they would get cash in the bank account from a big customer right at the last minute and be able to make payroll. They were operating at a net loss. They were dealing with a lawsuit with the daughter or the sister. And to add more to it, they are also dealing with a class action lawsuit that the previous sister who was managing before had created by not following proper wage and hour rules. So we came on, we put together financials, we digitized their accounting department, we added or moved them from QuickBooks Desktop to Xero and implemented Bill.com. We raised their prices. So Judy, who is 84, was like terrified to raise prices. She had these long-term customers who'd been with them for like 20 years. And none of them had left because they hadn't raised their prices, I don't think, in 20 years. So they're actually losing money on most of their clients. We also found that their health insurance, or that they had employees on the health insurance plan for the last 24 months that had deceased or left the company and nobody had taken them off. So we were able to do a lot for them in terms of helping them with their profitability. They also had a really big receivables problem. So it was taking customers like 40 or more days to pay. But meanwhile, they had to pay their employees weekly. So that was creating a bunch of cash flow issues. So we came in and implemented an ACH processor and implemented some new policies so that they would get paid before they delivered the services, which helped reduce their days that it took customers to pay from 40 days to 5 days. They also had an employee that, so we started seeing these, Jen on our team was doing the bookkeeping, and she started seeing these $1 charges come through on their American Express card. And we knew one of their employees had access to this credit card. And over the course of 2 months, there were hundreds and thousands of transactions of one of these $1 charges. Long story short, we found out that he was using the business American Express card to go on OnlyFans. So we ended up having to go in, fire him, and ultimately we're able to help them sell the business, got through due diligence. And so I didn't realize what we had done while we were in it. I was all very new to this. We were just trying to solve one problem after another as they came up. And it wasn't until we were redoing our website and the marketing team we worked with asked if I had any case studies. And I said, yeah, we have this case study. There's this one client I felt like we helped out a lot. Let me go back and run some numbers to see what the results were. And this is when I realized, wow, like we did a lot for this client. So we ended up eliminating the AR position. There was a woman in-house who was accountable for invoicing and collections. And by automating the invoicing and collection process, we eliminated that position. We were able to get $800,000 worth of cash that was sitting in the security staffing company's clients' accounts, bank accounts, into their bank account by changing their payment term policies. And then because they had that additional cash, they were able to pay down their line of credit, which reduced their interest expense by $48,000. And then ultimately we were able to increase their profit by 10%, which was $1 million more in profit. So the total increase in cash flow we were able to help this client achieve was $2 million. And then on top of that, they also were able to sell their business for $3 million. This is Judy on the left here, and then on the right, it's myself and Ramona, who's on my team, who worked on this account. And to this day, this was the absolute highlight of my career, the impact we were able to make for them to get them through this over 3 years. And Judy and Dorothy ended up being able to, after they sold the business, they were able to buy a condo in Maui. And this is a picture that I took because they also let me go stay there for free with my boyfriend. And on the right here is us celebrating after they sold the business, drinking espresso martinis, which was the first time that Judy had espresso martinis. And I think she had like 3 of them. So that was a really fun day, really exciting. So after this experience and after thinking about this, it got me thinking of how do we create more success stories like this for the small businesses that we serve at Momentum. And I became really obsessed with thinking deeply about why we do what we do and the impact, like the true impact that it has on the clients that we serve. When I first started working with Judy and Dorothy, I never had conversations with them about whether they wanted to sell their business. I never talked to them about the potential they had to infuse $5 million in cash into their business. Just wasn't on my radar. I was never taught to do that as an accountant. I was taught debits and credits and how to tie out a balance sheet. So over the years, I started developing a framework that our team could use to replicate the results that we created with that one client. And also, I wanted to create this framework as a tool so that other practitioners like you guys can create similar outcomes for your clients. So in this presentation, I'm going to dive into some of the challenge I've had in rolling out advisory and some of the challenge I've had in building this framework so that hopefully you guys can take what I've done and avoid some of the potholes that I went through. I really do think that you guys and accountants are really in the best position to help small businesses with this sort of transformation. We were just never trained how to do it. We were never trained how to speak the language of a business owner and what's important to business owners. Just very quick, I know we already had a background about me, but to give you some context about my background and my firm, I have an audit background, a tax background. I was at a firm for 6 years, and I got to do audit, tax, and CAS, client accounting services, which is outsourced accounting, if you're not familiar with that term. And then I also got to do a little bit of in-house work as a controller. So I've seen accounting from all different angles. Started Momentum. We're about to hit our 8th birthday in January. Today, we're a team of 8. We have 5 in the US, 3 in the Philippines. We're 100% remote. And we focus on businesses that do $1 million to $10 million in revenue. So they need what I refer to as financial operations, replicating what an accounting department would look like in a bigger business, and then taking that and putting that into a smaller business. So we use a pod structure, which means we have teams where we have a controller level person, a senior accountant, and then a bookkeeper, which is our Filipino staff members. And then that team works together to service a portfolio of clients. So when I've done surveys in the past, when I've talked to peers, as far as my experience going through rolling out advisory, these are the top 4 challenges that I've seen. So we're going to do a little survey right now. I'd love to know what has been your biggest challenge when it comes to offering advisory services. We'll see if we get the similar results as we did the last time we did this. So after you guys, as you're doing that, what I'm going to do is I'm going to go through and talk about my experience getting over the hump for each of these challenges as I've gone through this process.
I mean, as people are voting, it's incredible to hear that story. I mean, I think everybody here spends a lot of their time on P&L statements and balance sheets, but there are great minds behind those numbers and kind of the impact of, at the end of the day, it's Judy and what was the other person's name as well?
Dorothy.
Judy and Dorothy, right, behind those numbers as well, and they're running their operations. But very, very cool to see how you're able to transform that business.
Yeah, it was a wild time. I think at one point I was like their IT department mentor. It was fun. Okay, do we have the results yet?
All right, yes, we do. So let me read them out. So by far, the winner here is Don't Know How to Price Advisory. But in a very close second is It Falls on Me, the firm owner, or an expensive staff. Those take the cake when it comes to the answers here.
Awesome. Thank you. Okay, so hopefully I'll be able to answer some of those. Oh, here we go. Cool. Yep, that's about last time. All right, let's get into it. So what the heck is advisory? Everyone's been talking about it for a number of years now. It's frustrating because nobody's really defined what it is. Some people will call it a forecast. I'm here to tell you that you're either going to be very disappointed or very relieved when I tell you what my idea of advisory is. So what I have noticed over the 8 years that I've been running my firm is there is a gap between what business owners care about and what we do as accountants. So on the right here, we have our accountant. She's doing bank reconciliations. She's tying out balance sheets. She's got to pay some bills. She's sending out invoices. And on the left, we have our business owner. And he's thinking, can I afford to hire another employee? How should I price my services? Why is my bank balance going down even though I'm profitable? And he has all these questions about the outcome of what so the accountant's thinking about the inputs and the business owner is thinking about the outcomes. And so what LiveFlow does is it bridges the gap between what we do as accountants and what the business owner cares about. It's a communication tool. And so I'll get into a couple of examples here. So part of what we do at Momentum, I do a financial health assessment. And so LiveFlow is a great tool that you can use to automate this. So if there are certain KPIs or metrics that you want to look at, you can plug in, automatically. You have a template, and then get access to your client's QuickBooks Online account, connect it, and then you'll automatically get some of these numbers spit out, whatever you want to review with them. If you want to, whether it's a ongoing monthly report, or the way in the context that I'm talking about right here is a financial assessment. So the financial assessment, we've charged $595 for it. And it's just a high level view of how the company has been performing over the last 12 months and then over the last 5 years. And so we're looking at cash flow metrics and we're looking at profitability metrics. But the one thing I always look at is how long it takes customers to pay the business over the last 4 rolling quarters. So this is a real example of a business owner. The top 4 numbers, they're the DSO. So DSO is days sales outstanding. It's basically how long it takes customers to pay. So I'm presenting the financial assessment to him, and I say, John, I noticed that your DSO went from 40 days to 68 days in Q1. And then I also saw on your cash flow that you were really short 1 month, and it seemed like it created some cash flow challenges. Can you tell me about that? So he says, oh yeah, well, first of all, it should be only 30 days that it takes customers to pay us, because that's in our contract. So I don't know why it was ever higher than that. And in Q1, we had the sales tax issue. My bookkeeper was dealing with that. And then he wasn't paying attention to sending out invoices or collections. And then we almost didn't make payroll. And then I had to put money into the business. And then my wife got pissed at me. And then. And so it became like this whole story of something that seems so simple of, hey, this is an invoicing process. And from a bookkeeper's perspective, it might be, I'm just sending out invoices. But this is the livelihood of this man's family, of his life, right? And his relationship with his wife. So one thing that we can talk about as we're going through this financial assessment with him, and what I talked to him about was, why don't we get some, are there things we can do to get that number down? So can we ask for a deposit from customers? Can we implement an ACH processor? Can we take credit card? What are the things we can do to get that money into your bank account quicker? And how can Momentum Accounting help you with that? So we've elevated ourselves as a doer, right? Which is what his current bookkeeper is doing. He's just a doer, to an advisor by doing that. So I'll give you guys another example. A lot of times, again, we like to talk about what we do. We can give you timely, accurate reports. Instead of doing that, we can give them much more valuable information. So I don't know, whenever I go to the doctor, they always take my blood pressure, and the nurse always gives me the number. And every single time I ask her, is that good or is that bad? Because I don't know what that number means. And she never tells me, he or she. And that's the way our clients feel when we send them reports without any context. They know, they're like, cool, I have these numbers, but is that good or is that bad? So benchmarking is critical to advisory because it tells a client whether they are off track or on track, and it gives them a target to move toward. So another thing I look at in my financial assessment is I always look at the last 12 months, trailing 12. And the reason I do that, so if you guys have followed me, you know that I talk about this 50-30-20 rule a lot. So the idea is of your revenue, 50% should, no more than 50% should go toward direct costs. That leaves 30% for overhead and then 20% for net profit. Now, this is a general rule of thumb, and we'll get into industry specific benchmarks a little bit later in the presentation. But the idea is we're grounding them in something. And so if we look at this client here, we can see if we were to just look at October, there would be a weird swing where they'd have a negative net profit and they go positive, negative, right? So we can talk to them about, this is the value of accrual accounting. If I were to tell the client about accrual accounting without showing them this, they'd be like, why the hell do I care? Why is that important to me? So we're tying back what we do as accountants, what we're already doing, and we're just adding that last 10% cherry on top about why it's important to the business owner. So in this case, this business owner had 11% net profit, and with a momentum, we have a framework we use where we pretty much can guarantee a 20% net profit. And so we can show the business owner that their current net profit is 270,000. We think if you work with momentum that we can get that to 495,000, and that's going to be an extra $200,000 in your pocket. So in conclusion, I'm not asking you actually to do anything much different other than just reframe the conversation about what you're doing for clients currently. Okay, so we've solved challenge number 1. Now let's get into challenge number 2. How do I price these services? So let's just throw in the chat. I'm curious how you guys price. Are you pricing hourly? Is it a monthly retainer? Is it value pricing? Is it a WAG, a wild ass guess? Let's see how people are currently pricing. Okay. Monthly once established from Robert. Quantify savings. Oh, I like that. And then I can take a percentage. John, what kind of services do you guys do? CFO light. I like that. I use that term too, Laura, the CFO light term. Monthly subscription from Matt. Rhett says mixed. Fixed price on some, if unknown scope, maybe hourly. Yeah, it's definitely hard when you don't know what the scope is. John's doing tax planning. I like that. Gosh, we don't do tax at Momentum, but I think if I did taxes, I'd love to be able to be like, we're going to save you this much, but we're only going to charge you this much, and then be able to value price. Hourly, project based. Okay, so it sounds like a little bit of everything here. So I'll get in and I'll just talk to you some of the things I've tried and where I've ended up landing. So we go back to the story about the security staffing company. When we first started working with them and I gave them their proposal, I think it was like maybe $5 or $6 grand a month. And she comes back to me and she pulled out this piece of paper that looked like it was from a typewriter from the 1980s. And she's like, this is what our old bookkeeper used to charge. Why is yours so expensive? And it was $500 for a whole month of work. It was probably like 40 hours a week too. And I had no idea what to respond to that. It was like so baffling to me. But she, like I explained earlier, she's new to business. She has no idea. She has no context. At that time, I had no idea how to respond to that. But knowing what I know now and what I know today, I would talk to her. I would have said, hey, I noticed that you have this AR problem. You have $800,000 sitting in accounts receivable. We're going to get that into your bank account. I noticed that you're not profitable. We're going to go through your pricing. We're going to go through your margins, and we're going to figure out how to make you profitable. And we're going to, give you an extra $1 million to your bottom line. Now, I'm not going to, at that, in the beginning of a relationship, you might not know the exact results that you're going to get, but you can give them an idea, right? And then the other thing we're going to do, we notice that you don't have an AP process. And so you're paying bills right as they come due. You have no control over that. We're going to implement an AP process so that we are only paying vendors exactly on the due date, no earlier than that. And we have way more control and insight into when things are due and when cash will come out of your bank account. So we could have talked to them I could have told her, hey, we're going to create real value for you in dollars and define the value for her rather than her defining the value for me and saying, I think this is worth $500 a month. And so that's one of the things that LiveFlow allows us to do. It allows us to show the client, here is the results we can get for you. And then back what somebody else said earlier, then we can talk to them. We can give them a number that's less than what than the results we can create for them when we're pricing. So the first thing to know about pricing is that we are pricing the transformation, not deliverables. Accountants get so focused on advisory as a forecast. That's what it is. A forecast helps a client make decisions about the future. It helps them answer the question, can I hire a new employee? The same way that a profit margin helps them understand, or setting target profit margins help them understand if they're pricing correctly or if they have an operational issue or their staff is not utilized properly. So all of these things can be advisory. Advisory is not just a forecast, it is advice that we're giving them. So you don't actually need to change much about your current pricing model. So the way that we have defined advisory for us is a meeting with the client. So we're presenting financial information, KPIs to our clients, and we're doing either monthly or quarterly meetings. And the idea is during the sales process, we show them the value of what we can do for them. And then during those meetings, we're helping them answer questions like that. How much should I spend on marketing? How much should I keep in cash reserves? All those questions that our clients come to us with or our team with consistently, we've found ways to have an answer to all of those questions. So in general, what I recommend for businesses when I'm going through a sales process is like, okay, here's what you should be spending on your accounting or finance function as a whole. It's usually around I would say at least 2% of revenue. And when I say accounting or finance function, I define that as the bookkeeping function, controller, maybe some light CFO services, accounts payable, accounts receivable. And at Momentum, I'd say we do like light CFO or more controller level services. And there may be situations where we will refer in a CFO, right? But like for some of our smaller clients, they don't actually need a CFO. And then, so as an advisor, right, we're basically getting them, if we can show them that we're going to increase their profit by 10% and we're only going to cost 2%, then we've shown our value there. The other thing is understanding your average billable rate. So I think you guys will probably appreciate this with the actual answer here. So what I do is I take the average cost of my team. So if we're talking about this on an hourly rate, we need to have like a walkaway price, right? A minimum price that we're willing to do this work for. So I take the average cost of my team and I want to multiply that by at least 3.5 to 4 times. So if the average hourly cost of a team member is $50, that means you should be charging $175 to $200 an hour or realizing that on your fixed fee, right? Now, having the Filipino staff has helped us with that because we've got some team members that cost $60 an hour, and then we've got some that cost $12 an hour. And so we've been able to push down that work as much as possible to the Filipino staff, which then allows our US staff to then have these higher level conversations with the client. But and then on a monthly basis, what we do is we do everything on a fixed fee retainer, monthly agreement based on scope. And so we take the number of hours spent, or the total we billed for the client that month divided by total hours, and then that's our average billable rate, and then we have a target for that. So comes with understanding your cost, right? Your hourly cost, and then how many hours you think it's going to take as a minimum. And then if you think the client will pay more, obviously we can value price them based on showing that value up front. But the key is, remember to focus on outcomes, not deliverables, when you're pricing. Okay, so we've hopefully answered challenge 1 and challenge 2. So we know what we're advising. We know how to price. The third challenge is it's not scalable across industries. So question time for you guys. Do you niche or are you a generalist? And if you niche, what are you niching? Generalist, niche, professional service, and e-commerce. Okay. Generalist. Broad niche. Niche, creative services by Jen. Ooh, creatives are tough. Niche light. Oh, I like that. Software tech, professional service, e-commerce, deep dive, pathway to niching. Manufacturing. Oh, that's a rough one. Candace, you are a glutton for punishment. Robert asked, love the 2% stat. Did you make that up or is that based on anything I can show a client? Yeah, so I did do a bit of research on that, but in general, I found that 2% from an outsourcing perspective was generally more cost effective than like a full-time staff. So where I'm coming at it is I want to be less than a full-time staff member and provide more value. So that's typically where the 2% came in. But I did do a little bit of research on that as well. And then obviously, if you have like an e-commerce company or manufacturing, it's going to be more expensive because accounting is just more heavy in those types of industries versus a professional service or SaaS type business. Okay. Yep, Rhett said we use 1 to 3%, so you're right in the middle. Yep, for sure. Yeah, I think it's always like a good gut check. So after I'm coming up with, here's what I think it's going to take for us in terms of time and cost, figuring out, is that realistically in that 2% range for the client? And then obviously the bigger clients we work with, the more opportunity there is to charge more. So think about that. At Momentum, eventually we got away from anything under $1 million in revenue because I just wanted to have fewer clients and charge a little bit more rather than charge less and have like hundreds of different clients. But that was just what worked for me. Okay. Do you niche or are you generous? We got that answered. Oops. So this was a big challenge for me when I first started rolling out reporting. At one point several years ago, my brother and I actually tried to develop a reporting software that would automate a lot of the things that there's tools out there for now. And where I kept getting stuck is like, gosh, do I need a custom report now for every single industry? And so there were a couple of things I realized. And one I realized is that Momentum, I think, is more what I would consider horizontally niched rather than vertically niched. So I was like seeing everybody in the industry saying, you have to niche. But I was like, but all of our clients are coming to us with the same problems and like, we can solve these problems. And so that's when I realized, oh, when these business owners are coming to us, they're all coming to us at like this $1 million mark where they are in need, where managing cash becomes way more difficult, right? Because you've got more employees, you've got more vendors, you've got more customers. And so the timing difference between when you get cash to when you earn revenue and incur expenses is greater. And so what I realized, again, is that momentum is what I would consider more horizontally niche, meaning we solve that specific problem of needing financial operations built out in these $1 to $10 million businesses that needed more than just, I need books to file a tax return, but weren't quite big enough to need an in-house accountant. And actually 96% of businesses will never make it over $1 million. So I guess it is kind of a little bit of a niche then, right? But then the problem was, okay, I like working with these businesses that they're in different industries, but they all have the same problems. How do I then layer on advisory on top of that? So that is when I realized that there are 3 main types of businesses. And you guys talked about these. It seems like a lot of you guys, when you said you niched, were either in one of these 3. So I realized that there are businesses that sell time. So that's your HR company, your IT company, your security staffing company, accounting. And typically their issues are around profitability, which is usually driven by utilization and pricing, and then getting paid. So they're sending out invoices. So we have a lot of opportunity to help them with those 2 areas and talk about those in our messaging, in our marketing, in our conversations with prospects. And then we have businesses that sell things. So that's your inventory-based businesses. And as we all know, they usually all have the worst balance sheets. They have a ton of debt. They can't make payroll. They're usually underpricing. They usually don't recognize COGS properly. And so those are usually a hot mess. And so what are the solutions that we can then build, or KPIs reports we can build for those to help those types of businesses? And then the last type of business is our typical SaaS type business, where they get funding and then they're building something to sell. And usually all they care about is how much time do I have left, how much runway before I run out of cash. And so as we're going through and talking to our clients, if we can identify, okay, this is this type of business, this is the things that are important to them, then that helps us build our solution for them, whether that be KPIs or just, getting on a call with a client, a prospect, and noticing they only have 2 months of runway left, and ask them, instead of talking to them about how you can help them with accounting, starting with, hey, I noticed you only have 2 months of runway left. Are you planning on raising another round, or like, what's the plan here? So just like accountants, we have to foundationally understand debits and credits and the rule of matching revenue earned and expenses incurred. I think that if we foundationally understand these 3 types of business models, then we can start to build on top of it. Someone else mentioned on LinkedIn the other day, nonprofits would be another one to add to that. I saw somebody had nonprofits. So maybe there's 4 there, but we don't do much with nonprofits. And that's definitely a specialized type of accounting. So now that we understand these foundationally, we can start layering those on to different types of businesses. So for example, we don't work with restaurants at Momentum, but if I were to work with a restaurant, I already know how to deal with businesses that have people, and I already know how to deal with businesses that have inventory. So now I can say, so I asked ChatGPT, so this is where AI can get involved, right? When it comes down to benchmarking. So if you start broad, foundationally understand the 3 report types, or the 3 business types, model types, and then if you get a client that comes to you and you're not familiar with that industry, we can ask ChatGPT, or there's other benchmarking resources, but I've actually found ChatGPT to be quite accurate when I've asked it these types of things, surprisingly accurate. And so this is exactly what ChatGPT told me when I asked him about margins for a restaurant. And, we have to use our professional judgment here. If it told me that the net profit for a restaurant was 50%, I'd probably call BS on that. But I think it gets us, close enough where we can actually use our professional expertise and our experience to then help business owners, guide them in the right direction. The other thing I found is there's usually somebody in the industry, like we worked with marketing agencies. David C. Baker is big in that space in terms of benchmarking data. I have a client in the home services industry that he came to us and said, hey, my coach wants me to put the financials in this way, with percentages and even more granular than just these four, right? And so I said, hey, can you introduce me to your coach? Because they specialize in working with home service businesses and they have all these KPIs. I said, perfect. Let me meet him. Let me get these KPIs. And then we're going to build an offering for home services with these and say that we know how to work with some home services. So there are people out there in probably any industry that you're working in that is a leader out there that you can go network with if you want to get into that industry, or see what KPIs they're using. But we don't have to. I don't think we have to niche. I think like Momentum, we've been successful focusing on those three business types foundationally. So we have 3 different health assessments that we do and 3 different sets of monthly reports, and they all start with those three different formats. Okay, so getting into the last one here, my team isn't trained. Okay, so here's what happened. I figured out what advisory was. I said, this is how we're going to price it. These are the 3 different industry types. Now we're going to roll it out. And my team is going to be able to deliver this to our clients. It's going to be amazing. And so I showed up to the team huddle on Monday and I said, okay, guys, we're doing it. It's here. Every client is going to get this for free. We're just going to figure it out. And every client for Momentum is going to get it for free. That's just going to be the expectation. And then later I had a meeting with my director of ops and she says, Nikole, the team does not know how to use these reports. They don't know what they mean. They don't know how to have a conversation with the clients. And so that's when I had to step back and say, oh, okay, here's the last and final challenge that we need to get over. We need to train our team. So what we did was we developed weekly internal training. We did role playing with real client data and applied those concepts. We built reports in LiveFlow. We created tools and templates and calculators. So for example, if a client asked, how much should I spend on marketing? We have a calculator for that. And so these are some of the examples of some of the trainings that we have. So cost of goods sold versus overhead, why it's important. How do we set that up properly on the profit and loss statement when we onboard a client? When we onboard a client, we meet with them and we ask them, who on your team is a direct servicing clients directly? Who is an overhead? And then that all ties back to the 50, 30, 20 in our benchmark, right? So we set up everything correctly from the beginning. How much should I spend on marketing? Helping them answer the question, if a client asks, can I afford to hire an employee? What do we do? How do we answer that question for them? Other things like clients ask us all the time, how much money can I take out of the company? I'm an S Corp. How much do I keep in cash reserves versus how much I can take out versus how much I pay myself as a salary? And then of course, how do I improve profitability? So these are all examples of trainings that we've done. And so ultimately, I think the big missing piece with advisory and an industry is training. And the reason is because it's new, like client accounting services. When I've been doing it for 10 years, but at that time it's very new and there's still it's still new in terms of how long accounting's been around, right? So we've got CPA license and all of that. Everybody knows how to do taxes. Everybody knows how to do an audit, but nobody's taught us how to do advisory. And so when we combined the magic of these new communication tools like LiveFlow, and we did the training, that's when we started seeing the results. And that's when I realized that we aren't selling a thing, that the product we're selling is advice. And in order to give advice, you need experience, which we have, and we'll get more of. You need training, and you need a framework for delivering that advice. So again, think of LiveFlow as the bridge, but we still need that advice. So profit first, I knew I was going to say that, not profit first. profit first, sorry. Profit points is the framework that I've developed internally. And so this is the first time that I am sharing it with others and sharing the outcomes that has created and offering it as something that I'd like to share with you guys. Before I jump into that, I just wanted to quickly share some of the outcomes that this has created for Momentum. So we were able to increase our average client value from $1,500 to $3,000 a month. Our gross profit went up from 55 to 70%. I don't do any client work anymore. I focus on sales and marketing. And our US team works 36-hour work weeks. And I started creating I was able to create a more predictable pipeline for new clients coming in because I started focusing the content that I was creating on LinkedIn and in our newsletter on the why, the outcomes for the business owner rather than what we do at Momentum. Why should you care? I don't know if you guys heard recently on the right here, Finally is a bookkeeping company. They just raised $200 million, AI bookkeeping startup. On the left here, we've got Bench's pricing $249 a month. And so the reality is that we are going to have to compete with this pricing and these people that have endless money to build whatever automation they have or price whatever they want, right? And so we have to be able to differentiate ourselves. And this is what our business owners are asking us for. So if we wanted to build $1 million business at the Bench pricing, we'd have to have 335 clients. Or we could have 55 clients at $1,500 a month or 27 at $3,000 a month. So just figuring out which you prefer. Personally, I prefer fewer relationships because it's less stress, because more people equals more stress. So that's really, I think, I don't know about you guys, but even at Momentum in the last year, we've seen more churn and more price sensitivity than I ever have before. And so there's just more competition coming in the market. It's driving down prices. And so we have to find a way to differentiate ourselves. So again, getting into profit points, I don't have anything to sell you right now. I'm not trying to sell you anything at this point. I'm just trying to gauge interest. Is this something you think that would be valuable for you and your team? And so right now it's a page on LinkedIn where we're going to be putting out free content or free tools and tips. And then it's a newsletter that will have free tools and tips. So if you're interested in that, Millie's going to drop that in the chat. I think if we would have had training a long time ago, it would have made this journey so much easier. And so my goal really is to help other people overcome this challenge that we had. So if you're interested in that, click the link. You can add your email. And then as a special thank you for showing up, I'm really excited. I'm launching this free tool called the Cash Potential Calculator. So this basically kind of what I was showing you earlier that I did with that client, right, is you show the client where they at with their current net profit versus where they can be. And then you show them how long it takes customers to pay versus the target. And then if you put in an AP process and extend the time it takes to pay bills, the cash flow increase for each of those areas. And then at the end, it shows you what the total cash flow increase potential is for your client. So you can use this as a sales tool or to upsell existing clients. And this will be a free tool publicly available. So as part of showing up today, we'll go ahead and send you the link to this. I think it's going to launch. We've been building it for a couple months now. So I think it's going to launch hopefully this week, but you'll be getting that in your inbox soon. And I'd love to get your feedback on it. All right, so we're getting close to the end here. I just want to go through a few pitfalls to avoid. So number one, rolling it out without training your team. Obviously, training would help. Don't do that. Don't make them feel uncomfortable. Trying to get it perfect. So when we started rolling out reports for our team, to our clients, they've totally morphed and changed, because we would show it to the client, and then the client would say, well, I want to see this metric and I want to see this metric. And so then it created a version control issue. So what we do now is we have someone that's just accountable for maintaining what the core package is. And then if a client's like, hey, Ramona, I want to see this particular metric, then she has to come to Jen on our team that then builds that into either that client specific, or says, hey, that's a good metric that all of our clients should need. So that's one thing to be aware of as you start rolling these out. It's going to end up looking like a little bit Frankenstein-y if different team members doing different things. So try to keep it consistent. But also, like, you're not going to know what clients want until you roll it out. So don't try to get it perfect before you roll it out. Less is more. So you don't need, I would say, like 5 metrics max. Your team's perfectly capable of doing this. They just need the confidence, and the confidence comes from the training and the framework for it, right? And then remember, it's not about the reports at the end of the day. I know we all want to go sell a forecast and call it advisory, but advisory is advice, guys. It's you they want. It's the advice that you give them. So last couple slides here. Focus. So if you don't know what to deliver advice, remember to focus on outcomes. For pricing, remember to price the transformation, not deliverables. Aim for around 2% of revenue as a good rule of thumb. Understand your average billable rate. Target. So if it's not scalable across the various industries, remember to simplify to the 3 business types, and then use AI if you want to get more granular. And then train your team with a system and a framework. Okay, that's it. So let's, if you guys could just put in the chat one last thing here. What is the one thing that you will take away from today and implement? Focus on outcome transformation. Yep. Just do it. Yeah, no, that was the thing. We spent so much time figuring out. And then I was like, you know what, just going to roll it out and see what happens. And then it's just like building, like, if you look at people who build software, right? Like LiveFlow, the customer is the one really who creates the end product. And so you just have to start with that minimum viable product. 3 business types, multiple action items for me and the team, not just one. Focus on outcome. Yeah. Lauren says, a clear path to make things happen, understanding where you want to be, and build a system to be ready to go. Awesome. Okay, we will open it up to questions now. Anybody has any follow-up questions?
Nikole, we had a question earlier from Amir. I hope I said that right. You could start off with that one. In some situations, consultancy could be operational or advisory. If I have to split the proposal between both, what is the best strategy to make the offer appealing for the prospective customers?
Yeah, that's one problem we had too. Is like at one point I feel like we were like in the mushy middle. I've always found that starting with advisory, it's way easier to sell down to some of the like more tactical things, operational things, than start with a tactical and sell up. So I would position yourself more on the advisory side, and then just be like, and we can do all these other things for you. It's kind of included in the package, in the bundle. And like, we can't do the advisory unless we do all these other things. Oh, good question, Rhett. So Rhett says, how do you do that initial health check if you plug into the prospect's QBR 0 with bad data? So typically what I'll do is I'll go back. So if they're like, let's say they're just not up to date, but they have historical information, then I'll just go back to the period in which they had historical information. If the data is bad, then that's a perfect way to show, hey, here's what it should look like. So for example, if they have, let's say they're putting everything in overhead costs instead of putting stuff in COGS. And so it's hard for you to really understand. Most of the time, as probably most of you know, that the business owner is spending too much in COGS, or they're pricing not properly, right? So by showing them the targets of like, here's what it should be, and 90% of your cost is in overhead costs when it really should be 30. So here's what we're going to do. We're going to clean all this up, so then you can start to see what the end result should be. How to use LiveFlow. So we use LiveFlow for our month-end close process. So we have like a workbook that we do. So internal, that's more of like internal use. When we onboard a client, we set up a tab for every balance sheet account. So it's really easy for the reviewer to come in and review the preparer's work, and we can collaborate on that. We use it for a 2-week cash flow forecast. We use it for live AR management. So for our clients that have a lot of AR and need a lot of feedback, or want to see that in real time, and communication around that. And then some like reporting tools too. And if you didn't know, LiveFlow now has a visual dashboarding feature. And I don't know, Josh, if you want to talk about that, if it's coming out soon or if it's already out.
Yeah, absolutely. And do want to be conscious of the time here, as I know it's up at the hour. But that's exactly right. I know we have a lot of different people in terms of existing customers, and also people who may not heard of LiveFlow. LiveFlow is direct integration between your QuickBooks Online and Google Sheets and or Excel. So for the past 2-3 years, it was so that you can get that data flow, and then we also have plenty of templates to help out with forecasting, etc. And then most recently, as Nikole mentioned, we also now have a web app, so that you're able to create these visuals that are appealing potentially to your client base. So if you're interested in any component of that, Michael's going to drop it in the chat here to schedule a demo if you're a new customer. And if you're an existing customer, feel free to just reach out to me, Josh at liveflow.io. And if you have any questions, happy to assist you there. Okay, great. I know we're at time. Is there anything else, Nikole, or before I wrap up here?
No, that's it. Just the nick of time. Perfect.
Yeah, perfect. Yeah, no, first off, thank you, Nikole. I think I can speak for everyone here when I say that it was very insightful to hear your perspective on some of the challenges for advisory that you saw, how you kind of overcame them, and then specifically that profit points framework. That's the first time I'm hearing of it, but it's very, very helpful to kind of see how that was able to transform your business. I think this is the first time that that a webinar host has mentioned artificial intelligence. And as a software company, we're very much interested in understanding where and how, what is the place in which we can be most helpful in developing products for accountants, bookkeepers, etc. And with that said, there's a quick survey. This is whether you're an existing customer or a new customer. We're also looking at one other additional product to automate your transaction categorization process. So if you have 2 minutes, would love to get your feedback there. Yeah, once again, thanks, Nikole, and hope to see you at the next webinar. Thanks, everyone.
Thanks.